I'm an attorney by trade, and I've taken, I guess, a little bit of a unorthodox approach. I was an English major at Texas A&M University, which before getting into university, I barely got out of high school to start with, and had to go to community college because there wasn't a university, I guess, that was dumb enough to accept me. Um, Delivered pizzas, flipped burgers at Johnny Rockets, and always had kind of a better belief that the future could be better than the past. And I think it was just wildly delusional. My grandfather was the king of Iran's medical doctor. And so, after the Iranian Revolution, we weren't Muslim, and they pretty much killed half our family. And my namesake actually was a five-star general in the Iranian army who was executed by firing squad. And I was raised in a kind of divorced household with a German mother and an Iranian father. So it was kind of like a volcano meeting a tornado, quite frankly, which has still existed in my head all these years. Um, so I heard these just grandiose stories of this, ancient culture and, this old world and, how things were done when steeped in tradition and, how these neighborhoods and these communities were designed. And one day my grandfather and I were driving through downtown Dallas. And a lot of this is in my book, The Gift of Failure. It's a Wall Street Journal bestseller now. The first line of the book is "I hope you fail, and I hope you fail a lot," which has kind of been the story of my life. I was very much a late bloomer, I guess. Now, as a 41-year-old CEO with over $1 billion in assets, it looks like we did this fast. But I assure you, even my height, like when I was in high school, I was about 5'5", 5'6", and I grew to 5'9" in between 17 and 22. So pretty much, and getting into college and getting into university and then going into law school, like everything seemed like I was a late bloomer in every way, shape, or form. And one day driving through downtown Dallas with my grandfather, I told him I wanted to be a medical doctor like him, and he looked at me with this kind of look of almost like disgust. He's like, "We're in America, like this, this is in Farsi." And he's like, "This is the land of opportunity, effectively." I was like, "Well, what am I supposed to do?" He's like, "Well, you need to be a businessman." And I had no idea what the fuck that even meant. And I guess he could see the confounded look on my face. And, he just kind of like looked around, I guess, looking for some sort of answer. And he looked out the window and there's this big skyscraper. And he's like, "You see that building?" "Yeah." It's like, "When you grow up, go buy all of them." And like, I didn't even know how to buy a stick of gum at the time, um, but the moment stuck with me. And, I've always considered myself an artist. I was painting at a very young age. Most of the buildings that we have, I've sketched in some capacity over the years, the communities, the way the streets and the way the homes face each other and the sidewalks. And, one of our buildings in downtown Austin sits on a 25-foot cantilever that I designed conceptually during COVID, because it has, staircases on the outside and specialty HEPA filters and balconies, which is very unorthodox for offices. But at one point I decided, as an English major reading the greatest books in the world, that I was going to make the sky my canvas. And that's exactly what we did. And so I spent some time on Wall Street, working for some people that I did not want to work for, and realizing that, most of Wall Street is built on fees. And I never wanted to be rewarded just for capital raising. I kind of, so I, stuck to this moniker that we're not in the fee business, we're in the performance business. And that's the way I've looked at it, and we've, our investors are public pension funds, insurance companies, athletes, celebrities. One of my first businesses that I blew up actually was called Capital A Entertainment. I was the A, and the Capital was the head of a huge New York bank. And, we ended up doing, projects for the likes of the Black Eyed Peas during the Super Bowl, and Snoop Dogg, and you name it, A-Rod, Cameron Diaz, all these big names. And I kept those relationships intact, even though the business itself, one of the largest ice storms of the history of Dallas, hit during the Super Bowl, and, kind of monetarily screwed up the business. But I kept those relationships. And as I went to Wall Street and started understanding kind of the mechanics of private equity and how the business worked, you know, I went back to them, and I've kind of believed that, building relationships and building buildings and, building yourself, quite frankly, are very much synonymous. So the more that I worked on personal development, the more I worked on health and wellness. Anybody that knows me knows I'm a fanatic about health and wellness. And I believe you can't really have a healthy business unless you're a healthy person. So, I mean, I think there's more publications about me for biohacking in the Wall Street Journal and the New York Post, maybe than there is about real estate. And I found that the more that my health improved, mentally, physically, spiritually. I'm a huge proponent of transcendental meditation, which I learned from Ray Dalio many years ago. Finding a little bit more equanimity in my thoughts and being able to look at the chessboard from more of a bird's eye view. We started to bring in some of these celebrities and athletes that we had relationships with, and inevitably that kind of attracted a little bit of attention and gave us the ability to work with first responders, work with firefighter pension funds, work with medical malpractice insurance companies. We're partnered with one of the biggest in real estate investment firms in the world, and there's a joke kind of on Wall Street is that some of the big executives that work at these firms, the big pensions invest with their firms, but the executives invest with Ari. And so we built this roster of an eclectic group of investors for a variety of different deals. So if you look at our audited track record, and being a lawyer and growing up in the Bernie Madoff era, I kind of thought, if I'm fast talking and slick, is someone gonna, think that I'm doing something nefarious? So I talked to my father about it, and he's like, well, don't be offended, be a lawyer, figure out what you're going to do. So we went and hired a third-party fund administrator, put in institutional risk controls. We started raising capital almost through like a fund-to-fund strategy, because it was just me sitting in a little Regis, co-working space when we first started. And because of my relationships in New York, I knew a lot of great operators, some folks in multifamily, some in self-storage. And so I started, bringing in capital in small pieces, 50 grand, 100 grand, 200 grand, and putting it into various deals as like a co-investment. And after investing in 50, 60, 70 buildings, they started to sell. And once, a bunch of them sold, we went to KPMG, which was probably enough to bankrupt me at the time, to audit our track records. We averaged, over a 16% IRR in 38 cities, 13 states, 7 different asset classes in 2 countries. And we let the success of the business and the capital. And by the way, I never raised capital at the corporate level. I own 100% of the company. So this is not just my business. This is my fucking life. I mean, I don't own public securities. I don't own other ancillary things. I'm usually the largest investor in every deal that we do. And the business has grown substantially. We have over 1 million square feet of new construction delivering this quarter. So imagine this was buying, 50 acres next to, what became the Gigafactory. And, we bought a 200-acre site in Kyle, which was the fastest growing city in the United States in 2021, and a 118-acre parcel contiguous, we found out was about to close. And I was able, through a very long-term relationship with the broker, get on the phone with the owners. And 48 hours before closing, we paid them $500,000 to walk away and flip the contract. And we ended up closing on it and combining them to build one of the most iconic communities in the state of Texas. And in the process of designing this community, I coined a term that sounds like a lot of jargon now, but it's called futuristic suburbanism. And being a first generation American, and hearing the stories of, my immigrant parents and how they talk about America and the white picket fence and this American dream, being the artist at heart that I am, I thought, like, is there a way to go back to that 1950s, 1960s approach and, vilifying the tract homes of the world that don't have sidewalks and don't have alley loaded homes, and using design elements and pocket parks to foster community. And internally, we say a lot that, we put unity back in community. And some of these phrases on their face seem a little bit kitschy, but in fact, we're actually fucking doing it. And, we're attracting some of the biggest, smartest investors on the planet that are seeing it, and they're believing in what we're doing. And it just seems like the harder we work, the luckier we get. And with having master plan communities, single family homes, apartment buildings, and looking at them from this vantage point of, okay, what's the versatility and the flexibility of the approach? Like, because I don't invest in deals, we invest in markets. And we're looking at, from population migration trends to job growth to corporate relocations. And being born and raised in Austin was just kind of lucky. So when we started buying and owner operating, we were buying smaller Class B, Class C apartment complexes, and people looking at us like we're insane. But in reality, I'll give you an example. One of the projects that we own right around the corner from my office is 16-unit multifamily project, but sits on 5.5 acres next to Michael Dell's house. So in reality, buying these projects were an exercise in redevelopment of using multifamily financing to buy land. And by doing that, we've been able to go through rezoning processes to build, whether they're luxury housing communities, whether they're massive multifamily redevelopments. We're able to kind of garner the best of both worlds and be able to cash flow in the interim between 6, 7, 8%, sometimes higher. As interest rates has gone up, we've drank our own blood on some of these deals, admittedly. But the future value and never looking at short-term value, overseeing long-term value creation. And by investing in markets, you don't have to time the market or be right on every deal per se. You just have to have a strong level of conviction that the growth factors are going to be there. When you have Tesla relocating their global headquarters, and companies like Oracle, and we hear so much about Tesla these days, and I have a lot of respect for Mr. Musk. But if Tesla goes bankrupt, no one gives a fuck. They're going to buy another car. If Oracle goes bankrupt, the world shuts down. And when Larry Ellison, the chairman of Tesla and an original investor, decided to move his global headquarters to Oracle to Austin, and then you see this little company you may have heard of called Dell that's been headquartered in North Austin in a city called Round Rock, for the past 35 years, you start to see that these are battleship movements. So having, Austin becoming, Silicon Hills or the Silicon Valley of the South is one thing from a startup standpoint. But when these major companies like Apple having their second largest office in the world here, Google's second largest office in the world, Facebook's second largest office in the world, you start to see this writing on the wall. So you can look at deals, and that's great, but we're looking at this from a holistic portfolio standpoint of how can we, support the industrial backbone of the city that's creating jobs, and watching how the tollways intersect with the ancillary cities 10, 20, 30 miles outside of the city, and creating, housing projects or retail communities. We donated 11 acres to build the new elementary school on one of our sites. And if you go look at how real estate in the United States and really globally has performed next to elementary schools, not middle schools or high schools, by the way, elementary schools, they've retained a level of stability even in markets that are turbulent. So can we learn from the behavioral psychology standpoint of how real estate operates? Because to us, real estate is about people. Yes, we know the math, but the Egyptians built the pyramids and they didn't have an Excel. So meaning the science behind real estate and how you analyze the deals, although we like to over glorify it, is remarkably simple. But what happens of understanding what people really want and why they want it is what's been able to drive value. And it's why I took a $3,500 loan and built a multi-billion-dollar platform in under a decade, is because we look at this from a behavioral psychology standpoint and understanding what people want, where they're working, where they're eating, where they're entertaining, where they're falling in love, and looking at this as homes, not houses. Looking at retail as, an entrepreneurial backbone versus, a retail strip center. So the human side of the business is what we believe has been our greatest competitive advantage.